Welcome you to the deep dive. Today, we are plunging headfirst into what was a truly wild weekend for the crypto markets. It really was a stark reminder that in this world of digital assets, change isn't just fast. It's warp speed. We've gathered a stack of fascinating articles, some fresh market data, and sharp expert analysis. Hopefully, it paints a vivid picture of how these big global events can ripple, right through this unique space. Our mission today is basically to unpack what really happened when the market had that massive flush out and how some key cryptos managed to rebound surprisingly quickly. Plus, there's this really unexpected move from a Japanese retail firm that tells us something about long-term confidence, maybe, in Bitcoin specifically. Get ready for some eye-opening insights into, well, the links between geopolitics and digital finance. So, where do we start? What happened?
Yeah, it's a really compelling case study. What we saw was a clear illustration of how external shocks, things sometimes far removed from traditional finance, can trigger pretty significant and, immediate reactions in crypto. So we'll be looking at the mechanics behind these swift downturns and maybe more importantly, the equally swift rebounds. That should give you a clearer picture of the market's underlying resilience.
Right. Our sources are confirming that over the weekend, the crypto market got hit by a brutal $1 billion liquidation rout. This wasn't just a standard dip, was it?
No, not at all.
This was triggered by very specific geopolitical events. So what was the fuse that lit this fire?
Well, the immediate catalyst, according to our sources, was basically panic selling. This was apparently set off by reports of potential U.S. military strikes on Iran's nuclear facilities, something later confirmed, I believe, by former U.S. President Donald Trump. That news just sent immediate shockwaves,
Right.
through the market. And the result, over $1.2 billion in crypto liquidations over the weekend.
Wow.
To break it down, it was like $595 million flushed out on Saturday.
Okay.
And then another $642 million in liquidations hit in the next 24 hours.
That's an incredible amount. So which cryptocurrencies really took the brunt of this?
Well, leading the charge, maybe unsurprisingly, in those liquidated leverage bets was Bitcoin, a staggering $230 million.
Okay.
And following pretty closely behind was Ether. That saw about $188 million in what we call long liquidations.
Right, long liquidations. And for anyone listening who might not be totally clear, when we talk about a liquidation, what does that actually mean for a trader? Like, what's happening there?
Sure. So essentially, a liquidation happens when an exchange forcefully closes a trader's leverage position. That's a position where they've borrowed funds to sort of amplify their bet, right? The exchange closes it because they've either lost a big chunk, or maybe all, of their initial deposit, their margin, or they just can't meet the ongoing requirements to keep the position open. Basically, the market moved against them too much, and their position can't sustain it anymore.
Okay, gotcha.
And often, a cascade of these liquidations, it can signal market extremes, where sentiment has kind of overshot. And sometimes it can actually precede a price reversal because all those over-leveraged positions get cleared out of the way.
I see. Makes sense. And it wasn't just the big two, Bitcoin and Ether, feeling the pain. Our sources show several altcoins got hit hard too, even if they're now showing some signs of recovery. Solana, for instance.
Yep, Solana saw $28 million in liquidations.
And XRP.
XRP took a $21 million hit. And Dogecoin saw over $25 million in liquidated bets. So quite widespread.
Right. But despite that huge impact, what happened next was, well, pretty remarkable. By Monday, a surprisingly quick recovery took hold. Bitcoin clawed its way back over $100,000, settled around $101,237 after that brief dip below six figures.
Yeah.
Ether was hovering near 2,236 cents. SOL edged back up to $133. XRP traded above $2. Even DOGE bounced back to around 15 cents.
It was quite the turnaround.
And this swift rebound, this is where it gets really interesting, I think. Analysts have been weighing in on why the market managed to bounce back so fast. Eugene Chung, he's the chief commercial officer at OSL. He observed what he called divergent strength in altcoins. He put Ethereum's resilience down to growing ETF inflows, money flowing into those crypto exchange-traded funds. And he also noted that Solana and other layer one tokens, the sort of foundational blockchains, showed strength because of improving network activity, more developers coming in, and even speculation about their own potential ETFs down the line.
Right. And adding to that, Nick Ruck, who's a director at LVRG Research, he suggested another angle. He thought the market's quick rebound reflected this underlying optimism, maybe hope, that the Iran-Israeli conflict would likely stay localized. with limited spillover into the wider macro environment.
Ah, okay.
His expectation apparently is that any retaliation from Iran would probably be limited
Yeah.
to avoid a bigger, more protracted conflict.
Hmm. So if we connect this to the bigger picture, then, the speed of this recovery, it kind of suggests that crypto is still operating within a broader macro uptrend, doesn't it?
It could suggest that, yeah.
And these liquidation events, painful as they are for those involved, maybe they are just seen as entry points for strategic buyers.
Exactly. And speaking of strategic buying, this is pretty fascinating. Our sources highlight a really bold move by Metaplanet.
Oh, yeah, the hotel firm.
That's the one. A Tokyo-listed hotel firm. They just bought a massive 11,111 Bitcoin for about $117 million.
Wow.
And here's the kicker. This purchase happened at an average price of about $105,681 per BTC. Precisely when Bitcoin was dipping to lows of around $98,000 during all that geopolitical chaos over the weekend.
So they were buying right into the fear. That's gutsy.
Absolutely. This wasn't just, routine buying. This was buying the dip big time.
And that purchase, it pushes their total Bitcoin stash to, what was it, an impressive 11,111 Bitcoin.
Exactly. Now worth over $1.1 billion.
That's quite a holding. And their average buying price for the whole lot.
It's now around $95,700 per Bitcoin. So it really illustrates a firm that isn't just like dabbling. They seem to be strategically accumulating during market dips, seeing these moments as opportunities, not red flags.
Yeah, that's a strong signal of conviction, I suppose.
For sure. But, while these big market moves were grabbing headlines, it's always worth remembering how much else is happening across the crypto landscape. Things move so fast.
Right. Like what?
Well, for instance, even as the markets were reeling, we got reports that North Korean hackers were busy upgrading their job trap attacks.
Oh, I saw something about that. What are they doing now?
Well, they're using pretty sophisticated social engineering, posing as recruiters from legitimate crypto companies like Coinbase and Uniswap
Wow.
to deploy this pile and ghost malware. And it specifically targets crypto workers' wallets, usually during these fake job interviews. It's a, sobering reminder of the evolving threats out there.
Definitely. It's not all just price charts.
Not at all.
And innovation keeps rolling, too, right? We saw a surge in social media buzz around top AI agent tokens.
Yeah, that's right. Social engagement for those tokens linked to AI projects jumped over 200% just this past week.
Interesting.
And Cartesi launched its first fraud-proof rollup, which is a pretty significant scaling solution designed to make transactions faster, cheaper, but still keep things highly secure.
Okay.
So, these kinds of diverse developments show there's ongoing innovation and a really broad spectrum of interest within crypto, even when the market feels uncertain.
Right. So pulling it all together,
Mm-hmm.
what does this all mean for you listening in?
Well, I think what we've seen is that crypto markets, despite, their reputation for being incredibly volatile,
Mm-hmm.
they can actually show remarkable resilience, even when facing major geopolitical events.
Mm.
The speed of that rebound, plus these strategic moves like Metaplanet buying big during the dip, it really highlights an underlying confidence, maybe, and it shows the potential for what seems like a crisis to actually become an opportunity for some.
Precisely. It's a powerful reminder, isn't it, that while the headlines can be dramatic and, immediate,
Yeah.
understanding the mechanics, like liquidations, and figuring out the motivations behind these institutional players, it can offer a much clearer view of maybe the market's true direction.
Yeah.
It also kind of underscores how the crypto space keeps maturing. It's attracting both significant institutional interests like Metaplanet, but also, unfortunately, those sophisticated threats we mentioned.
It definitely does. And this raises, I think, an important question for you to consider. In a world where global events can instantly impact digital assets, how does understanding these market flushouts or liquidation events, how does that change your perspective on what's a real market downturn versus maybe just a temporary, perhaps even healthy reset?
Yeah, that's a great question. And maybe also, what does it tell us about the long-term conviction of those who see Bitcoin as a strategic asset? Especially, when the immediate forecast looks pretty stormy. Lots to think about. Thanks for diving deep with us.